Good morning. Good morning. All right. I want to first just say thank you for everyone for being here. We hope to bring some valuable information here on what we think can be, somewhat the lifeblood of your business, which is, access to financing, whether that be short-term capital or, buildings or other capital that you need to operate your business. Want to also say, great job on the first panel. A lot of great nuggets from the social media marketing panel. So thank you for the time on that as well. I want to start with just some introductions of our panel here, and I'd ask that each panelist kind of, tell us, who you work for, what do you do, how do you help your clients, and spend just a little bit of time sharing that with the group.
I'm John Lee. I'm the Interim Director of the Small Business Development Center at Lamar University. We are basically a free management consulting company. We're an economic development organization. We get funding from the feds and from the state to be able to help people get started in business and be successful in business. Probably 80% of the clients that I work with are people that are trying to get started. And the earlier, the better. If you're thinking about doing something, it's always good to share that with somebody, and we can be a valuable resource for you to help you on your journey. It's not going to be easy, especially that first round of funding is probably one of the most difficult things that you're going to do as a small business owner. So you need to be prepared, and it's good to have other people that can help you on that. So we can do that. We can help you put together business plans. We can help with financial projections, basically the things that the actual lenders are going to need to be able to help you with that. So that's what the SBDC does, and we're more than happy to help anyone that needs that assistance.
Good morning. I'm Amanda Ellis, and I am the Beaumont business banker for Hancock Whitney. Hancock Whitney is a large regional bank. I do offer anything and everything you can think of you might need for your business banking needs. And I've been with Hancock Whitney for about 2 years, close to 2 years. I have been in business banking, commercial banking for about 12 years, and in banking total about 28 years. Me personally, I've only been in Beaumont for about 3 years, and I'd like to thank the Chamber for getting me involved in Leadership Beaumont. Leadership Beaumont got me connected to the community, and I do partner with John as well at the SBDC, and I would like to learn more about what Chris does so we can partner as well. So thank you.
Okay. Hey everybody, my name is Chris Ranniger, and I work for Communities Unlimited. We are a nonprofit financial institution. Our office is located in Nacogdoches, Texas, which is about 2 hours north. We are funded through the TLL Temple Foundation, which is a charitable organization located in Lufkin. They used to be Temple Industries. Now they have a charitable wing that's now trying to give back to the community. They give scholarships. They give back to the medical community, food banks, and now they're trying their hand at economic development. So they brought us in to do small business lending and free business consulting, thanks to them. So we have a table over there. My partner, Trent, he does the small business consulting, similar to what John does at the SBDC. And what I do is a small business lender. We help give out funds to small business owners that usually don't qualify for a bank loan. We're kind of that next layer of financing, which I'll get more into here probably in a little while. Thank you.
Perfect. Let's start with, in your view, what is the most important, maybe first step for a business to take, even maybe prior to reaching out to a bank? And we'll start here with John.
I've told this little story before, but entrepreneurship and being in business is kind of like going to a carnival. If you're independently wealthy and you're rich, you can play all the games, you can make all the throws that you want to, and then you finally win a big old stuffed animal, and now you go write a book and tell everybody about how great you were and how you did it all by yourself. Most of us are not independently wealthy and aren't able to do that, which means that when you're in the carnival, you've got 1 or 2 throws. So you better be prepared. You better understand what the games are. You better understand what the rules are. And you better figure out what it is that's the best thing for you, which one's the best one for you to play in. You can read books, you can get all kinds of advice. All those things are good, but those don't necessarily mean that they apply to you. I could probably read a book by LeBron James talking about his workout regimen, and I could follow that exactly, and I still can't dunk a basketball. So just because it works for one person doesn't mean it works for you. So you need to find out what you're good at, what you think you can be successful at. You need to measure the market. You've got to be more prepared, because the last thing that anybody wants is another failed business out there. And if you just go in and just decide, hey, I'm going to do this, I'm going to open up this restaurant. You know, my family says that I cook better than anybody else around. Well, I hope your family is willing to spend a whole lot of money at your restaurant, because everybody else may not think that. Or you could be the greatest chef in the world, but then you go into business and you open up a restaurant, and then you find out there's a lot more to it than just cooking. And if you don't have somebody else to run the front of the house and to do those type of things, you're going to be miserable, because what you liked was being the chef and doing the cooking. So there is so much that you need to learn to prepare yourself for going into business. I get a lot of young people that, because I'm on the campus, they'll come and they say, hey, I've got these great logos and these great sayings, and I want to start up a t-shirt printing business because I could sell a lot of t-shirts. I say, have you ever worked in a t-shirt printing business? You know, maybe you need to go work at one for 6 months or a year and learn everything you possibly can about that business before you just go into it not knowing what you're doing. So there's no such thing as a free market. There's rules. And the rules, to a great extent, favor the people that already have money. So if you don't have, you know, that wealth to back you up, if you're not a rich kid, then you better be prepared. And those are the things that you have to do going in. So all the things they talked about in the last panel about the marketing, you need to figure out what your market is. Erica talked about the customer. You know, your customer is whoever's going to pay you money. So you need to figure out who that really is and where that money's going to come from and who wants to buy your product, if that's what it is that you're selling. So it's there's a lot of preparation that goes into it. That doesn't mean that the deck is stacked against you. It just means that you need to know what you're doing before you get into it, or it's going to be extremely difficult. Right. And that's part of what we can help you with.
Great. Amanda, so if you don't have a rich kid sitting in front of you that's privately wealthy, what are some of the successes and what are the things that you would want to see so that they, you know, you can help them get access to financing?
So as a business banker, I enjoy watching small businesses grow, and that's what I'm here for. So as part of that process, I help with resources. I help getting the small businesses connected to the chamber, to the SBDC, to help get the information on where to get resources to get started. Just not too long ago, the grants that were offered by the chamber was an option to help get funds for those small businesses as well. And then just getting started, you know, at any point you can contact me. It may be that it takes you 6 months to get the business going. It may be 2 years. I can still be a part of that process, and I'm willing to do that.
Sure. Chris, if you don't mind, maybe talk about the importance of a business plan. So more beyond the fact that they're a good chef, you know, when you go to make the loan, you know, what are you looking for in the business planning process, and what do you need to see, you know, actually handed to you versus maybe just articulated in a conversation?
So what I'm really looking for is that in their business plan that they understand their business on a financial level, things like how much things cost. Do they understand their expenses, their revenues? Can they talk to me about that? Is that plain to see? Because that's probably the biggest hurdle when I deal with applications is the lack of financial knowledge. that a lot of small business owners have, and you can kind of sometimes see that in their planning. But there's a lot of good resources here in the room that are available to help you with that step in that journey, to help you come up with how to use QuickBooks, or Wave is another good one, or just making connections to an accountant. There's a woman who owns an accounting business here today. Just working with them to try to better that, to shore up that weakness if that's what you have. But that's kind of the first thing I look at, so that make sure that they understand their financials.
Sure. Amanda, before I go to John on to maybe expand on the business plan itself, when you get a business plan, you know, while all sections are important, as a banker, do you tend to key in on one particular section or maybe two particular sections as you evaluate a loan request?
I like the entire business plan. That's your story. You start off with everything being up here. Well, the business plan is your story to get it to me so I can read it and present that to the underwriters at the bank. I mean, I pass that along. That helps me in my process of knowing what you do for your business and creating that. You've got your marketing and all your strategic plans in there. That's what we look at. What you plan on doing, the next phases you plan on having with your business. We look at everything. So not just have a business plan of what you do now, but what do you plan to do in the future as well. And that can also include projections. We also need like 3 to 5 year projections that are monthly, your expenses and your income that you're gonna have for your business. But be realistic, and these guys can help you with that part of the planning in your projections that I'm gonna need as part of your decisioning process.
Perfect, thank you. John, maybe elaborate a little more. You know, I know a lot of what you do is business planning, and maybe tell the room how much you charge for that as well in the process. But just tell us, what do you need from the business owner to help provide a business plan? And then, you know, again, maybe elaborate on when you go to the projections, which are necessary, as Amanda talked about. You know, what information do you need from them and what's important to show? So first, how much do you charge, John?
0.
Okay,
Yeah.
thank you. Affordable.
You can look online and you can see all these fabulous business plans, some of them 30 pages, 40 pages. You know, they'll either, you can download or they'll sell you a template for all that. You know, the one that we normally use is 4 pages long. All the parts are important, like Amanda said, but the main thing is the description of the business, what it is. What is it exactly that you're going to be doing? What are your revenue sources? And have you really thought about that? So how are you going to make money? I mean, the bank wants to know, is this going to be profitable? You know, is it actually going to be is it going to make money? And can you pay this loan back? I mean, that's really what they're looking at. And whether it's a bank or a private investor, I mean, they want to know the same thing. So they want to just basically a description of the business and what it is you're doing. If you're doing something that a lot of other people are doing, then how are you going to set yourself apart from the competition? What are you going to do there? And then, of course, there's parts about marketing and location. All those are important, but then the other part is the management portion, because that's the part about you. So when you go sit down, whether it's a bank or a private investor or a CDFI, Community Development Financial Institution, if I said that right, then they want to know, who's this person sitting across from me? You know? Credit score is huge. If there's anything you can possibly do to improve your credit score, you need to do that. You know, I get a lot of people that say, hey, my parents didn't really teach me about this. I made some bad decisions. Well, that's part of the risk factor. And you're already coming in saying, I want to start a business. That's already a little bit risky. A lot of small businesses do fail. So, I mean, that is a little bit risky. And then if you got a bad credit score, well, that's probably going to push the bank, you know, over to the no side. Which, I mean, I've got my little bit of money in a bank, and I want them to do the right thing with it. You know, I don't want them closing down. So, but the big thing is what I tell people is when they fill out that management portion is act like this company already exists and you're interviewing to be the chief operating officer of the company. What would you tell somebody about yourself that would make them think that you could run this company? So act like it's a job interview. Nobody's ever as perfect as they are in a job interview. So make sure that, you say all the good things about yourself. It's not your life story or anything, unless for some reason that's extremely compelling, but it's all the things that would convince somebody that you're the right person to run this company and that you know how to do it. And again, it's brought up about collaboration. If you are that great chef and you are smart enough that you've got somebody that has restaurant experience that's going to run the front of the house for you, then you include them in that business plan because they're a partner in that with you. They may not be a financial partner with you. They may be an employee, but you still include them because that shows that you're kind of ahead of the game. You've really thought about it. You've got somebody with experience that's going to be doing this. So those are the kind of things that you try to put into a business plan. It doesn't seem like it when you start a small business, but you and the business are two separate entities. You are not one and the same. It may be Harris Consulting and it's got your name on it and you are the owner, you are the founder, all that stuff. Same thing, with Rebecca, you're a one-person show, but you are not the business. You want the business to be healthy so it can continue to pay you that enormous salary that, that it's paying you, like in the first year, which may be almost nothing. But still, you have to treat it as something separate. You are working for that business, no matter what your title is. So you have to separate yourself from that. And you do that when you're doing the business plan. It's not all about you. You're just the employee. You may be the engine that makes it run, but it's a business. It is a separate thing, and you also want it to survive and be healthy so it continues to hopefully support you.
Thank you. Amanda and Chris, maybe talk a little bit about when someone actually approaches you and has a formal request, how important is it that they have all of these things somewhat addressed or identified ahead of time? And, does that help you in the lending process if they identify what maybe the risks are? If they tell you, hey, credit score is this, or I don't quite have the liquidity that maybe John thought I should have. How important is that for them to tell you up front?
Okay, so when they do initiate the conversation with me, it's pretty much like an interview. I've got to know everything. So it may be that we do have the conversation about credit. How do you feel about your credit? We have a minimum score at the bank that we have, so I need to make sure it's above that minimum. Do they need to start off by working on their credit? Like I said, it could take 6 months or 2 years. Other things that we may address is, okay, how much liquidity do you have? Do you have those funds available to show on your, what we call a personal financial statement? That's one of the first things I look at is liquidity. Do you have that available? Along with, I do ask about the business plan and the projections as well. So if it gets to a stopping point to where they don't have that information, I do contact the SBDC to help with that process, to get them where they need to be there. So once they get to that point, once they've got their personal financial statements, once they've got their credit, they feel good about the credit. Once they've got their tax returns available, because I'll need 3 years of tax returns. So once we have all that, that's when I can start the process.
Got it. Thanks.
So our process is very similar. We require pretty much the same documentation. The only difference with credit scores with my organization is since we're funded through grants, so it allows us to take a deeper dive into a person's credit history. We're not beholden to a certain credit score necessarily. We have the ability to take to look at the credit score and, for example, medical debt, right? So my organization is able to overlook medical debt, if that is what is driving the credit score down. A lot of institutions aren't able to do that because as a small business owner, sometimes things happen that they're beyond your control, and big medical payments are one of those things, and we understand that things happen. We look at what's happening more recently within the past 2 years. What kind of efforts are you making to improve yourself financially? And we can see that when I look at your credit score. Are you making steps? Do I see a pattern of, within the past year, are you making payments on time? There's no late pays, no collections, so we're able to work with that a little bit more than a bank does. But yeah, also projections. That's important to us. It helps us to see kind of what the business is going to do over the next several years. That's kind of the basis for my underwriting in a lot of situations, especially in a startup that doesn't have any financials from the past. We'll use those to determine, what the business is going to do. And yeah, like John can help prepare projections. Trent, with my organization, can help you prepare projections. But yeah, just being prepared and having all those documents ready whenever you contact me is very important. But I mean, you can contact me in any part of the process, and I'll be willing to talk to you and work from there.
And one thing I'd like to add about your credit, be prepared before you talk to any of us and go to annualcreditreport.com. That's annualcreditreport.com. You can access that annually, of course. It's a free reference, and you can look up all 3 of your credit reports. And you just get the information that's on your report. You also get the opportunity to dispute. It has contact information if there's anything you need to dispute, but it does not provide the credit score. Thank you.
Chris, if you can, let's talk about pools of money, and if you could tell us about a CDFI, and then maybe we can compare that to conventional financing and SBA lending. So if you can, maybe tell us about CDFI. Who does that fit? Talk broadly about.
So we have different pools of funding in each. So we operate in 7 states as Communities Unlimited, and we have separate pools of funding based upon the region where your business is. We do a lot of SBA loans. So we do the micro lending program, which is $1,000 to $50,000, and that's in all of our states. Here in Southeast Texas, East Texas, all the variations of the East Texas from the coast all the way to Texarkana, we're funded through the Temple Foundation. So we use their grant funding as our pool of funds for you here. We have in different states. Just for example, Tennessee has its own funding source that they use to fund their businesses. So it just depends on the region. But the Temple Foundation here in East Texas covers this area, and their generosity has allowed us to not only the free business consulting, but it allowed us to offer generous rates to small business owners that they usually wouldn't be able to get, without being a trust fund baby. That might not have been the word he'd used, but you know what I mean.
Privately wealthy.
Yes, that one. Thank you.
Good. So with if we can drill down just a little bit, Temple Foundation, are there any restrictions? So would a small business owner who has no historical performance, would they be someone that could be qualified for this? What criteria are you looking at to fund those types of loans?
Okay, so you for example, a startup that is looking for funding to get off the ground. Basically, what we're looking for at a minimum is just to have some type of industry experience. I want to say it's minimum 6 months working in the industry. We want to make sure that you know what you're talking about, understanding your business. Can you come and when I talk to you on the phone or in person, are you able to talk to me about your business? Do you understand all the variation of things that can happen? There's a phase of business called ideation where you just getting off the ground. You don't understand anything about it. It's just like a hope and dream. We don't fund that. But if you have a little bit of experience, we can kind of start from there and kind of see where you're at.
Great. Amanda, you want to talk about SBA lending and conventional lending? Does the bank offer SBA lending, or is that something only available through Small Business Administration?
Well, at Hancock Whitney, we do offer SBA lending. We have a business development officer. She's also Amanda that I work with out of Houston. So the difference is we do offer conventional as well. So the main difference to me would be the down payment. Like with SBA loans, you can go in as little as 10% down. And so that means that you've got those funds available, like I said before, on your personal financial statement. That's the first thing I look at, is do you have the liquidity for that? So that would be your funds that you use for the down payment. And conventional, it's 20% is the minimum, but the SBA is different in a way that you may have different qualifications, maybe easier to get the SBA than it is conventional, but some benefits are that for sure.
Good. John, do you want to touch on just real quickly the difference in a 504 and a 7A? I think we throw around SBA loan, just terminology loosely, but is there just one SBA loan? Maybe you could talk a little bit about that.
Yeah, number one, the SBA does not loan money. So you need to know that. That's what the SBA does is the SBA will take on part of the risk of a loan. So with an SBA 504, that's kind of like if you're going to buy a piece of land and build a building to start a business, then the 504 may be a good loan. The paperwork is enormous. I will say that. You have to get a third party involved, which is a community development corporation. There's a couple of those in this area. And they have to do their part. And what you end up with, if it's a $1 million project, then the bank would probably loan $500,000. The SBA would they don't loan it, but they cover $400,000, and you're supposed to come up with the $100,000. So it's kind of a 50-40-10 type thing. On those loans, you do get a lower interest rate. So the interest rates right now are running 10.75, hopefully 11, right around in that neighborhood. The 504 rates are running closer in the sevens. So you can get a lower interest rate, do it for 25, 30 years. The only thing is that interest rate, when you sign on to that, that SBA portion at least is sold on the secondary market. So you're responsible for all that interest. You really can't pay it off early. If you do pay it off early, you have to pay it off, with all the interest that you would have paid if you would have done it for the 25 years. SBA 7A loan, right now, the SBA guarantees 85% of the risk of that loan. So that's why the banks, they're really kind of, I don't want to say it in a bad way, but they're only on the hook for like 15%. So they're able to do a smaller down payment. And that's really the interest rate. Everything else is going to be exactly the same. The banks do handle that in-house, the ones that do the SBA. So you don't have to get a third party involved. It's just the one loan. You don't have to get, anybody else. But it's the interest rate's going to be the same thing you would have paid on a conventional loan. The paperwork's about the same as you would on a conventional loan. The biggest advantage is that the banks are a little more apt to do those because they're not taking on so much risk. So those are the ones that for a startup type business or a young business that's getting started, those are usually a good option because you may not have to come up with as much capital. And there's other things. I mean, if you are buying a business, an existing business, there's even ways that you can, if you get the current owner of that business to delay the down payment portion for 2 years or to do an interest only for 2 years, you could actually, the bank could loan you 90% of the money and that other 10% is just a delayed payment, an agreement with you and the owner for 2 years, and you can go in with zero down. So the SBA looks at that as if the owner's willing to do that, then they're saying that they know it's a viable business that you're buying. It's still going to be here in 2 years, and they're willing to wait 2 years for their money. And it can be tax advantages for them. So, I mean, there's a lot of things that you can do. The biggest thing is you got to have your stuff together, and you got to be prepared and know what you're doing.
Agree.
And a benefit to the conventional loan is you don't have as much paperwork as you do.
I know these things can sound complex, but resources like we have on this panel, resources at other institutions, I don't think there's an expectation that you know all the answers to the questions that you may have when you approach an institution. So please use resources like John Lee, Chris, and even a banker. I don't think there's, Amanda, do you have an expectation that people just completely understand what they're requesting when they come to the door?
Absolutely not.
Okay.
So like I said, it could be 6 months, 2 years,
Perfect.
anytime.
Perfect. Ron, if we want to open it up for questions. We are taking loan requests as well, so
Yes.
feel free to raise your hand and ask for money. We've got pools of money here.
Hello, Mr. John. Would you, did you cover 7A? I think we did 504. Did you cover 7A, or would you say it again, please?
The 7A is where the SBA guarantees or takes on the risk of 85% of the loan. So it will help you get a lower down payment because the SBA is assuming that risk on the loan. So that's really the only difference between a conventional loan and a 7A.
What we've seen too with 7As, the big differentiator is 7A and 504. 504 is for a long-term fixed asset. The 7A program was created for traditionally business acquisitions where you were going to go in and purchase a company that may be completely unsecured. You may be really purchasing goodwill. And so the 7A allows you the ability to do things like that, whereas the 504 is really more for a long-term asset such as a building. There's types of equipment that can qualify for 504 lending. So again, there are more programs than just the 7A and 504. While they're probably the most popular and probably more times than none you end up in one of those two. But there are other SBA options, and again, just another reason to pull together resources like what's at the table to identify really what is the best option.
Hello, everybody. I'm Sabrina Whitley again. I'm a thinker, number one, and I'm a teacher at heart, and that's my passion. And I have I call it a 501c3. And I know people are saying 504 or 50, but if it's an O, what does the O stand for? Is it a number, the zero?
It's a number. It's a 504.
Got it. Good question.
Hello, I see a lot of stuff online about grants, and I understand you guys are talking about like lending, but do you also help small businesses with grants and what that paperwork looks like and how to be prepared to get one of those?
I will let Chris talk about that, but my standard line on that is there's nobody out there who's going to give you money so that you can start a business to make money for you. That's not the way the world works. People that have money want to make more money. There's a website, if you want to write this down, called Hello Alice. It was started by 3 women, and they do business consulting and a lot of other stuff, but there's usually at least 3 grant opportunities that are legit grant opportunities on that website at all times. It's going to be you and a few thousand other people applying for it, but a lot of times they're targeted toward women-owned businesses, minority-owned businesses, and it's legit. You can go on grants.gov and look to your heart's content. The majority of those are really targeted toward communities or maybe chamber foundations or other things of that nature, and maybe some nonprofits. But even with the nonprofits, it's usually a match. If there's a grant on there, it's a $50,000 grant, but you got to match it with $50,000, and sometimes you have to match it with $100,000. So there's all kinds of restrictions and stuff. So don't listen to what the little people tell you on TV, and they're very hard to come by. But there are private investors, again. But you've got to sell them. It's what Lance said. You got to do it right the first time, and where it's so good that they can't say no. Then you can go with that. But Chris, I know.
No, you put that really well. It's the same with us. We do have a part of our organization called Community Sustainability, but they connect municipalities with grants, but we don't do anything by connecting small businesses. But that is great information, John. Thank you.
And one thing to think about with private investors is you've got the dream. Are you willing to share that dream?
Yeah. Perfect.
Any other questions?
Looks like you may have one.
Hey, while you're making her way back there, I do want to mention Dana Espinal in the back over here. Dana handles Port Arthur, Mid-County, Orange County, and then out of the Lamar office, I handle Beaumont, Hardin County, Jasper County, going up that way. So we both do the same thing, and Dana's a fantastic resource as well.
Just a quick question. I know that it's possible, but I don't know the details around it about the SBA loan forgiveness. Is there any kind of specifications or qualifications for that?
Yeah, that doesn't exist.
Okay.
The PPP loans were forgiven.
Right.
Okay, there was some other, but I mean, a normal SBA loan, no, there's no forgiveness. And believe me, no forgiveness. As in, if you're my age and you take out a 504 loan and you pass away in 20 years and it's 25-year note, that note passes to your heirs. I mean, there's no forgiveness. They do expect to be paid back.
But we all knew that, right?
Time for one more? All right. Well, thank you all very much. Kevin, John, Chris, Amanda, please give them a hand. Thank you all very much for sharing. I'm sure they'll stick around a few minutes if you have any one-on-one questions.